Yeah, so we are at a really critical turning point, and I'm pretty clear we are in this major super cycle to the upside. It's been out of favor for a few years, flagging out, and now we're starting that kind of breakout, that run, and this is the first major kind of pullback from these all-time highs that we saw in gold. You can see in the last month we've had a really strong push up. The dollar's been falling, and typically when people get a little bit nervous about equities markets and what's going on with all the printing, we tend to see precious metals start to do well. In fact, if we take a look at where price could go based on this current bull flag momentum here, we can get a really good feel. If this price can hold, then we're going to go quite a bit higher. We're looking at $2,600 an ounce for silver for gold. And based on this pattern, we are looking for that to run. It could take 1 to 2 years for that run to happen. Now, I think a lot of people think it's going to happen much faster than that. But based on this chart pattern, how it took 2 years for it to go from the low to the high, it's pulled back for a year, and now it could very easily start. It could take a year or so or longer to get back up to those new targets. But that's what's really interesting on the gold chart. It's starting to break out. Now, on a monthly chart, you need to wait for monthly closes. So we're still another day or so away from that. I think Monday is the last day of the month. So that'll be a really bullish sign. Now, right now, the US dollar is holding above support. I do think eventually it's going to break down and collapse, and that's going to spark a great big move in precious metals. But at this point, it is at support. It's a long-term support going back many years. The odds are it's going to have some type of bounce, and we could see that happen, and it could take a couple of months. And we could see gold. If we look at this gold chart and just zoom out just a little bit here, and we look at this pattern, we could very easily see gold flag down and kind of build more of a base, some type of launch pad for the next run to go up here. So it depends a lot what the US dollar is going to do. Eventually, I think it's going to break down and continue to weaken. We're going to see commodities and metals go higher. But short term, I feel as though we're going to see the dollar bounce, and we're going to see gold pull back and trade sideways for a little while. And all that will actually be a strong sign for the price of gold. It'll get the moving averages all in favor. The 50-day back above the 200-day gives that kind of bullish cross. So all those things will kind of come together. And really, you got to be patient with the markets. The markets almost always move a lot slower. Patterns take a lot longer to unfold than you ever anticipate. So it's just a patience game. Gold is a long-term investment. It's a long-term sentiment shift in investors. So it's not generally going to happen very quickly. And the pattern size that we're looking at on the monthly chart clearly shows it's a 1 to 2 year pattern for the next upside target to get hit. So you just kind of sit back and let it mature. So now that gold has got above the 200-day, it's broken this following trend line. Precious metal miners are starting to break out. The odds of it going down to 1,600 are pretty diminished. The trend is back to the upside on the short-term basis as of this month. For an investment type basis, it's breaking out, starting a new rally. So I'm looking at higher prices here, not 1,600 anymore. Yeah, well, silver has been holding up really well. It's been trading sideways while gold and gold miners have been selling off for several months here. More or less, silver's got a lot of upside potential. It moves percentage-wise a lot more. I think there's a lot of speculative traders kind of moving into silver, hoping we're going to get some great big, huge short squeeze and see it pop and rally. And silver typically outperforms gold. That being said, gold typically will hold up a lot better when it does top out, where silver will collapse and give back a huge chunk of its gain. So silver is definitely not like as steady as gold. But when you look at the silver chart here, it's had a nice run. It's been trading sideways, and it's very close to breaking out. It really needs to kind of break $30 an ounce for it to kind of really fully kind of break out and start another run. And there's a lot of upside potential in silver percentage-wise. I really think you need to own both. I'm not a huge fan of moving into one or the other, because the market always has a way of moving the one that you don't own. I think the whole basket of precious metals is the best play. It's not about trying to make as much as you possibly can. It's trying to make sure you're going to catch the move and you're going to catch most of it. So you need a little bit of a balanced portfolio owning, gold and silver and gold and silver miners as well. I mean, it's got a lot more potential. It's much more volatile, and we're all looking for gains. I'm probably about 65% silver, and then the rest is gold when it comes to long-term positions. If you want to get really active and you're a very short-term trader, I mean, you could definitely be heavier weighted in silver. So most people seem to be heavy weighted in silver just because we know when it pops and runs, it's going to have a substantial move. I mean, we saw some of these huge moves. You go back to 2010. When we saw this explosive rally where it went from $19 an ounce all the way up to pretty much $50 an ounce. And that type of scenario feels like it's actually playing out again. If you look at this chart, we had a multi-year kind of pullback, and then it's formed this kind of cup and handle formation, this base, and then it exploded to the upside. Well, we've kind of had a similar pattern where it's broken down, it's forming this huge potential rising wedge, this cup and handle formation, and we could very easily see that go back up to that $50 an ounce point and potentially go way beyond that. So there's a lot of explosive power, and you can just see how quickly silver can run. Most of these big rallies, when you look, are very quick, very substantial. If you're not in place, it's almost hard to jump into silver after it's already run 20, 30, 40%. But there's some huge moves in silver, and you kind of sometimes just have to be positioned in it. And that's the nice thing about owning physical metals is, it forces you to kind of hold on to them and stick with it. Whereas short-term trading, it's easy to get chopped up and miss some moves. So I think there's a lot of upside potential here for silver to rocket. You never know when it's going to happen, so you kind of need to hold some. I think the stock market here is getting a little frothy. I think there is more upside potential. But this year, we've definitely seen the stock market put in some pretty big rotation, meaning the leaders of last year are not the leaders this year. They're actually some of the worst performing sectors so far this year. And when we see stock market rotation where big money is moving out of the leaders, that's typically an early warning sign that money's starting to go a little bit to cash. They're looking for fresh places to put money. But really, there's a lot of mixed sectors right now that they're not all firing on all systems. We're seeing about half the sectors trading in a short-term downtrend, and that's not good. If the stock market's kind of grinding higher with fewer and fewer stocks supporting it, it means it's about to stall out and have some type of a nosedive and correct. And I think there's potential for a 15 to 20% correction in the SP 500. Typically, we see bonds perform well. We'll see utilities and precious metals just before that happens. And they can rally for 1 to 2 months before a stock market has this pullback. So we're getting the signs that that's starting to happen. And I think it's something to be aware of down the road. But at this point, the market's still in an uptrend, and you got to stick with it at this point.